Yes, we had a very good Q4. We outgrew the industry again, and we did it on the back of a number of tweaks that we did in terms of unit economics, gross profitability, such that we're positioning ourselves in a good place for driving profitability in our platform business this year as a full year basis. We are not yet profitable on a group basis as we have our integrated verticals, where we invest heavily in the quick commerce space with building out the D-marts, so local warehouses for 10, 15 minutes delivery. So on a group basis, we still have to wait for that profitability, but in the platform business, I think we're in a very good place for driving profitability this year.
Niklas, I want to ask you about inflation because you're dealing with it firsthand of a day. Central banks are debating what happens, and it was a fascinating conversation from the Bank of England that if expectations rise, businesses pass on some of those costs and have to lift wages because people are expecting better incomes as well to meet higher costs. Then that's a problem that's entrenched inflation. And I know that you're having a conversation at the business too about what type of pricing you have, whether there should be some sort of surge pricing to try and cover the pricing of wages for some of those key drivers. Just give us a sense of the challenge you're facing on keeping a lid on driver costs at this stage.
Well, we're pretty used to inflation. I have been operating in Turkey and Argentina and many other emerging markets where we had this in the past at extreme levels. Normally, the business have stood very strong through inflation, even in those cases. The positive with our business is still that we charge on our GMV, and as inflation goes up, food prices goes up, also our the pricing goes up. So we are a little bit, we are not so impacted by it. Of course, we still hope that inflation stays in reasonable terms, since it's still bad for workers and in the lower income class. But I think from a business point of view, I think we are not so impacted.
Niklas, good morning to you. Your shares have halved and you're having to cut costs in markets where you'd like to expand more. Is the growth model over?
No. I think our first priority is still growth, and we're growing into profitability this year. And we are not getting there because of the market or share price. We don't care much for that. But of course, it is a market where we have to make sure that we are not dependent on the capital market. We do not want to be forced to raise capital. So of course, we have to choose our battles. And we now have a very strong balance sheet after also some rationalization in sales in certain portfolio companies. So we sit on a couple of billion of capital. We don't have to raise, and that means that we can keep on growing and keep on investing for growth. But at the size that we have come to, profitability comes naturally.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.